All right, what up? It's Ruben from TG. And if you've ever been stuck not knowing what tickers to trade, this video is for you because I'm going to tell you what tickers you should be trading when you're trading options. That way you're not stuck and you're not guessing and you can trade a lot smarter too. And this way you can have a list of just solid stocks you can be really good at and just make as much money as possible. All right, but before I do that, all right, I'm going to let's go look at the wins real quick. All right. Okay. So today we swung Tesla overnight. They had robotaxi news, and they also had a lot of good. They were just right there near a very key level that if it broke above, it would explode. Now, I did not expect it to explode the way it did here. I'm just gonna pull it over here real quick. You can see here that this thing is just strong. Tesla is just super strong. And so what ended up happening is that we got September calls and it just skyrocketed 60% max. And I ended up rolling the position over for a longer expiration because I believe it's going to go to possibly 400 sometime within like 2-3 months, something like that. That's what I'm thinking. But we'll see what happens. And I know a lot of the members also caught that win. Asian turned it from $3,000 to $4,200. So just like literally overnight, right? So awesome win. All right, let's talk about how to the best stocks for option trading, top picks for smart traders, right? Okay, so I said, if you've ever asked yourself which stocks are the best for trading options, which is a common question I always get asked, like, how do you know how to pick that stock, this and that? Do I need to trade meme stocks or just stick to the S&P 500? Can I really grow an account if I only trade a few names? You're not alone, right? There's a lot of new traders out there who think they need to scan hundreds of tickers, but the truth is that the best option traders stick to a very short list, very high quality names, and they trade them with precision, okay? And the only way you can do this is by getting a lot of repetition in and training them for a very long period of time. So if you're looking to stop guessing and start trading smarter, this list is your blueprint for that, all right? I just want to show you again my list here. My list is very, very small. Like you should aim somewhere between 10 to 15 tickers as you grow. But you can see here, like I'm always looking at the ETFs like SPY, SPX, IWM, QQQ. I got the mega caps here. I got some short swings here. So like Tesla, AMD, MSTR, MU is one of my favorite ones. Lilly is one of my favorite ones too. Like very, very short list. This is pretty much my entire list right here in short list. So like I keep it very, very simple. So I just get good at trading those, and that's okay. That's all we need. We trade a lot of Tesla actually. Like if we take a look at the wins here, we trade a lot of Tesla. There's Tesla here this day, which was 170% win. We caught that. QQQ again is one of our favorites. Tesla again. IWM, so ETFs, very short list. It doesn't really get complicated, right? And that's what you want. Sometimes we trade some other names too. QQQ for the win. Netflix, SPX, we love SPX. It's a common pattern that you'll see within the community here. Like we just stick to a very small list. Okay. All right, so let's take a look at this real quick. I wrote up a list here, and I'm gonna put the link to this article in the description box in case you want to bookmark it and use it as a reference. All right. So if you're a new trader and you're ready to like put your 6-figure account into play and you don't know what to trade, this is going to answer your question right here. All right. So I said, stop looking for hot stocks, start looking for consistency. Forget the Reddit tickers and the hype plays. The best stocks for option trading have consistent volume, tight spreads, and predictable behavior. Okay. I'm going to show you an example here. I'm going to see if I can pull up MDB. MDB. I'm going to show you what bad spreads look like. Okay. I'm going to show you what bad. This is MDB. And we're going to pull it up here on this thing. You can see here, like, if you take a look at this call option chain, you can see the spreads are ridiculous. 20 cents, this 207 is like what, 70 cents, 80 cents. Like this is a wild spread. Okay, for me a tight spread is like 5 cents difference, max 10, max. And most of the time you'll see that very tight spreads with high volume, high liquidity tickers. Okay, so what you want to do is first, like, you want to check that the high average daily option volume is high, right? You want to make sure that the tight there's a tight bid and ask spreads, so you're not overpaying. Because one of the problems with like large spreads is that you get in like at the ask price, but the current price was like 20 cents lower, right? So like you're down when you even get into the option contract. You're already losing money. Stocks that respect levels, so you're not getting clapped or chopped around. And this is really important, okay? And only high liquidity tickers like Tesla, ETFs, Apple, Microsoft, like they respect levels, especially when we're using Dextron and we're looking at like key levels here, like the way I mark them here, this like AOI, AOI, MR, AOI, like they have to respect levels. Okay, so this gives you a better feel, faster exits, and more reliable setups. That's why you want to make sure that all these three boxes check off. Okay. Number two, stick to the usual suspects. You do not need 100 tickers. You need like 5 to 10 that you know very, very well, very intimately. All right. That means you understand how price moves, what happens during news. You know how it moves when SPY goes up and this goes down. Like you understand that very well. Here are some of the best stocks for option trading based on volume, volatility, and the option chain quality. Okay. So SPY, definitely the king of liquidity. Great for all strategies, for sure. SPY is my go-to, as well as SPX and XSP. Okay, so those are, but SPY is like the more affordable one. So if you want to do SPY, you can do for SPY. Um, Tesla, we love Tesla a lot. Why? Because it has high implied volatility. When you have high implied volatility, that means the dollars move a lot more because we get paid by the option chain. If we go back to the Excalibur into this like option chain example, I'm going to mark it here actually. The delta. You get paid for every dollar movement here. That's what delta is, right? And so because Tesla is such a high implied volatility stock, it moves a lot intraday. So we can make a lot of money with Tesla, just on a given day because it moves so much and we get paid so, and since it moves so many dollars, we get a lot of dollars in our option contract. That's why we like Tesla a lot. Okay. Apple, very stable. Oh, Tesla, yeah, massive moves, ideal for directional bets. Very, very, we like Tesla a lot. Apple is a very stable, liquid, and option friendly. Apple is definitely a staple. Okay. You, if you're looking for something that is affordable, quality, Apple is your go-to. It's got a lot of volume and liquidity all the time. Okay, AMD and Nvidia are great for momentum traders. Solid stocks. We're actually doing an AMD leap on it as we speak, and we like Meta, Amazon, and Microsoft for big premiums and solid structure. QQQ is a clean ETF to trade tech, like a macro setup. Like if tech is doing bad, you could always use QQQ, and then you could use sector plays like IWM, XLE, XLF, like all the spider sectors for rotation and gamma exposure. So these are all work well, right? And you want to go advanced, like layer in dark pool levels or option flow data on these names to find prime entries. Okay, so these are like staples that you should be adding in your trade list right now and get very, very good at knowing how they move. Okay, so this is the list: 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. 12 tickers. That's a good start. And then you slowly add a little bit more. Okay, but any ticker that you want to trade, it needs to follow at least some of these components right here: liquidity, good implied volatility, uh, solid respects levels, and so on. Okay. Number three, look for stocks with juice. The best option trades come from the stocks that move, but not erratically. You want names with high implied volatility that pays out. strong institutional interest, news catalyst, or earnings coming up. This juice makes your contracts actually move when you're right. So you're not just stuck watching theta kill your trade. Which reminds me, we traded MongoDB earlier in the year. And these contracts had no liquidity. It was so dry. They did not move when MongoDB moved. Okay? Unlike Tesla, again, Tesla has a lot of interest, a lot of institutional interest, a high IV, and it moves a lot. Okay, so pick names that have juice within them. Another one that we like is actually Lily. Lily always has had huge daily moves. Okay, like this right here from 785 all the way to 756. That's a $30 move, right? Even on the upside right here, this 778 all the way to 800, right? That's like a $30-$40 move. That's nice. Make sure that it has juice. Okay, that's what makes it move. So number 4, avoid these common pitfalls. Not all popular stocks are good for option trading. Penny stocks have low liquidity, wide spreads, and very unpredictable. Low volume tickers are hard to get in and get out. Cheap options with no premium, these rarely move in even when the stock does. Just because a contract is cheap doesn't mean it's a good deal. All right, always remember that. Always remember that. Number 5, all right, use tools to know when to strike. So once you narrow down the list of quality tickers, right, what you want to look for in your tool set now is you want to look for unusual option activity. So let me show you Gextron here, actually. I'm going to pull it up. Okay, I'm going to pull up Gextron here. This is Gextron. This is the tool that we use. We like to see what unusual option activities are coming in for today. Okay, and I can always go back to previous days to see what's going on, and I can see what's going on. Actually, let me show you Telegram. Let me show you what when we got into Tesla, we held even through levels that it was blowing through because of this. So I posted here this screenshot in the Telegram group. These are unusual option orders, and Gextron shows me the aggressiveness that it's coming in. How aggressive they're coming in. Short dated, sweep type orders. They're coming in aggressive because of the green background. To us, that was very, very bullish. So that's why I was saying, like, when I was walking through it inside my Telegram group, I was just saying, like, this is going to explode even harder. This is called gamma squeeze. And then I was just guiding them through all that stuff. But anyways, you want to make sure that you find tickers that you can, then you want to look at the unusual option activity. Okay. The next thing is IV expansion, right? You get paid more when the IV rises. Let's go back to this. Let's go to Tesla here. Okay. So when I go to Tesla, the one way that you can look at the IV is just look at the option chain. If we go back to Excalibur, you can see implied volatility right here and just see if the IV is increasing. Another way that we know if IV is increasing is that we look at the expected move and we can see if this number is increasing or decreasing. This EM column, because Gextron has this feature called expected move. It forecasts what the range is going to be for a given ticker, and this uses implied volatility. So if it's expanding, then there's more. That means IV is increasing with it. So that's one way that we find out. Okay. So then the next, you want to look at gamma exposure levels. It tells you where dealers may hedge and force. That's what we use here called the daily key levels. We look at these tall bars, whether they're positive or negative, and it tells us where are the biggest support and resistance levels. Okay. And then you want to see expected range moves. So again, platforms like Gextron gives you this in real time insights without the noise. So like this is always updating as the market's going by. Like right now, as the market flow is coming in and receiving option flow orders, Gextron's going to see that and then it's going to update if it needs to. Okay, master one setup on one stock. So the real pros don't need 100 names. They trade SPX every day or Tesla every week because repetition builds edge. So like I said, use these names and trade them over and over. It has to become muscle memory. Okay. So you got to ask yourself, do I want to scalp intraday on SPY, swing trade NVIDIA through earnings, sell credit spreads on Apple weekly? Then you go deep and know how that stock reacts at key levels during earnings and when volume spikes, right? So it's just getting practice. It's just getting exposure and just time behind the screen when just so you can become a better and become more skilled at it. Okay, 7. Practice with your core list, not random tickers. So one, I actually like paper trading and I always recommend it to get the hang of it. Don't rely on it. There is a time period, like by day 60, 90, you should be off of that and start putting in real capital to test it out, right? So paper trade first using 5 to 10 stocks, learn how they move during macro events, where they usually bounce for, or fail, how option premiums behave when they run, then when you go live, you're not trading blind. You're trading with conviction because you've seen the movie before, right? So your experience, you have time behind it, 2 to 3 months, and now you can put some real money into it and you can start trading, right? It's not going to be a surprise to you. You got enough, at least somewhat of exposure during a certain market environment that you could be like, okay, I know what's going to happen here, or have an idea. All right, so give it time. Real edge takes reps. Don't rush to add new tickers every week. Great traders go deep, not wide. Stick with a short list. Track how they react to CPI, FOMC, earnings seasons, and market gamma shifts. And the best part is that once you master these core names, you can spot opportunities before the breakout, not after. Okay. So, final word is that if you're serious about trading options, stop bouncing from stock to stock. Pick names with volume, structure, and option flow that makes sense. Then build your entire strategy around them, right? Master their behavior, study their premiums, trade their right strike with purpose. The result is that you stop chasing, you start compounding, and you build a real skill. One setup, one stock, one smart trade at a time. All right. That's how you get started. And these are the best stocks for option trading. All right. So that way you're not like jumping from one thing to another and just seeing your P&L go down. All right, that's it for this video. It's already been 17 minutes. If you want to trade with me and my team and get good at trading these tickers with us, I'll put a link in the description and I'll put a link to this article in there too if you want to use it as a reference. And I will see you on the next one. Peace.